Good afternoon, everybody, and welcome to TradeTheseStocks.com. This is our daily update video. Today is March the 22nd, 2013. It's a beautiful Friday here in Atlanta, Georgia, and wherever you are trading from around the world, I hope you had a great trading day. And now that you're probably going outside to the park, having a great weekend, I hope that you get to enjoy some good weather now that we are entering the springtime. Nonetheless, let's just talk about the charts. Today was a great day in the charts. Like I predicted yesterday, on Fridays, really it's hard to really anticipate much downside in the markets. The way that the media are wired, it's just that, we like to have good news on the weekend so that people can go out and buy. And really, that's what it is, if you really think about it. We rarely get any bad news on Fridays. And as a matter of fact, initially I was wondering into the weekend if people might be afraid to hold, their positions because of all all these things that are going on in Europe and in Cyprus. And lo and behold, what did we get? We got really good news. At least on the surface, basically what happened is that there is something called Plan C that's been circling around, and this Plan C is something that would ratify some sort of bailout for Cyprus. But just looking at news reports and watching the reporters on CNBC that are actually right now in Cyprus, it just looks very bad. Every store requires you to pay in cash. You really can't get your money out. As a matter of fact, there is one bank in Cyprus that's only limiting a withdrawal of about 250 euros per person. And so this is something that we really have never seen before. So, even though this is a small country and we might forget about it next week, just think about it. If that were to happen here or wherever you are, and this was your hard-earned money and you just had it somewhere in a bank, and the bank told you, well, you know what, you only get to limit, you're only limited to, I don't know, $300, $400, and that's it. It doesn't matter if you have something you need to buy, some sort of emergency, if you have bills to pay, you're limited to your own money. We're not talking about a credit card, limit. We're talking about a limit to your own saved money. And that to me is just, it's very eye-opening, because it confirms what I see on the charts. And that's always nice to see, because, yeah, you look at the charts, you see the candlesticks, and you see your patterns. But when you look at these kind of large-scale patterns on the weekly and monthly, and you see these very important pivot points, and finally you see some sort of news that actually confirms what you see, it really gives you a lot more confidence in what you're doing as a technical analyst. And that's always good to see. Now, of course, we don't really like bad news in the world, but let's face it, stocks have always been running in cycles. We have bull runs and bear runs. We have good times and bad times. And so when you think about it, since 2009, we have seen a really, really big reversal in the markets. And no matter how much you argue that the economy is getting better, really in proportion to what we see in the charts, the economy is not really all that great. Because when you think about it, has the economy really doubled, in the last 4 years? It hasn't. Yeah, you might have reduced the unemployment rate a little bit, and it is debatable, how they calculate this, and I will leave it up to you to make your own decision. But to me, it's just, it seems like, the markets are getting ahead of themselves, and now it's time for a correction. And I will get into that a little bit later, but that was just my broad overview of the markets. Now, in my video yesterday, I told you that this whole entire week, the S&P spider chart has been gapping up or down. And to me, that was very interesting. And as a matter of fact, we had a little bit of a gap up this morning. If you see right here, it wasn't a big gap up, but nonetheless, we had a gap up above the 20 MA within just about half an hour, we made it over the 50. Right then and there, we made it over the 200. So to me, this was very bullish. Within about 40 minutes, we crossed 3 different MAs on the 10-minute chart. And then the market just basically consolidated sideways. And what was interesting is that, like I said at the beginning of the video, I was thinking that maybe people might be scared to hold their stocks into the end of the day. But what happened? We had the biggest buy candle within the last 10 minutes of the trading day on the spiders. And so there is absolutely no fear in the markets. Even though you see all this that's going on in Cyprus, it seems like just the news that Cyprus is getting a bailout is good enough to get us back on track. So we still have this buy the dip mentality in the markets, and I'd be lying if I said that you can't fight the markets. You can't. So we're still in an uptrend, and so we get these news every once in a while, and we might get these flash crashes eventually, but nonetheless, I see the charts for what I see them, and today the charts were pretty good. And as a matter of fact, if I look at the VXX, which tracks the VIX fear index, you will see that the VXX is very low. It's been at about $21 for pretty much most of the week. And there really is no fear in these markets, and let me just look at the daily on the VXX. And this is going to just show you how there is just absolutely no fear in the markets. I mean, just look at it, and in just a matter of a year, this VXX has been deteriorating lower and lower, and now we are at these, for the most part, all-time lows on the VXX, and it held this green candle for a little bit, and I was thinking that maybe we might put in some sort of inside bar, but we broke below it. Tried a little bit higher early this week, but the VXX has been holding it down. There is no fear in this market. There is the buy the dip mentality. As soon as bad news is over, it doesn't matter what happens. It's kind of like stashing away dirt under a rug. You know it's there, it's something bad, and that you really didn't solve it, because the right way to solve it is to vacuum it. And that's what really the world has been doing, and these economic policies all over the world, they're just, so bad that I don't think these politicians really realize what they're approving for their governments to do. You can't constantly push things under the rug. Eventually, they're going to seep through, and everything's going to get worse. And so it's very sad that I'm seeing this money printing across the world. It's a competition, basically. Who is going to devalue their currency more? If you just look at Japan, for example, Japan is leading this action, and this just doesn't look good. Eventually, Japan is going to go through a severe correction, and even their finance minister has said that he wants to get their stock market to, I believe, all-time high. So he had a specific level, and he said, well, we'll get it to this level, and that's it. And so they're openly saying, well, you know what, we're manipulating our currency because we want to inflate our markets. And, that's illegal. But, who am I to tell anybody, especially a government official, what is illegal and what is not? These guys set their own rules. Now, enough of me rambling. But like I said, the spiders had a really good day today. We had this really big candle towards the last 10 minutes of the trading day. So it seems like people are kind of getting their confidence back. We have this buy the dip mentality. But beware, next week you don't know what's going to happen. And I remain neutral for next week. I was positive for today. For next week, I'm not sure. Something might happen out of the blue. If Cyprus could have a problem like this, I'm pretty sure a lot of other countries are having the same problems, but what they're doing is they're basically just pushing the dirt under the rug, and one day when it all seeps through, it's going to be a domino effect, and then, within a couple of days, you're going to get 5-6 countries that are voicing the same problem. So get ready for this. Now on the daily, the spiders look pretty good. They are into a little bit of a bullish consolidation. So if I kind of draw these two lines, I will show you. We had a really good run here from the 26th of February. We were at about 148.75. Made it to this this top right here, 156.70ish. We were very shy of getting all-time highs. Now we are pulling back on lower volume, if you can see. So this is just telling me that more than likely the spiders are just pausing to go higher. Now I don't know when exactly this is going to be, or maybe the pattern might even fail, because in all honesty it's not the best pattern. Okay, I see more of a rounded pattern right here, and sometimes these rounded patterns can also tell you that you might reverse lower, but nonetheless we might get just a little bit more upside. It seems like this market is just pausing and trying to gain momentum and energy to go higher later on, maybe within the next week or two, but not much. So even if we have more upside, don't expect very much, okay? Because these rounded tops are for the most part telling you that the market is getting tired, that there probably is going to be some distribution. And I do have to say that I've seen some distribution days recently, and so you know, on a bigger scale we are getting into a top, and like I said in my last video, anticipate some sort of downside. But right now, with my outlook into next week, I think we might have a little bit more upside, at least early in the week. I'm not sure about later on in the week, but maybe Monday through Tuesday, maybe even Wednesday, we might have a little bit more upside. Now, why did we have the upside today? We had it because, like I said in my last video, Nike reported earnings. Nike beat expectations. This was a surprise because everybody had lower expectations of Nike. I believe a lot of analysts actually thought that they would miss because of some of the data out of China. But what happened is that, you know, Nike went up 11%, so this was a very much a surprise in the markets, and it's really Nike that held up this market. Of course, other stocks as well, but this was the driver behind it all in the morning. Another one was Tiffany's. Tiffany's also beat expectations, but I do have to warn you about Tiffany's. When you look at intraday, when you look at the intraday chart, do not be a buyer here. You put in this big red candle. Now you are basically consolidating for the whole day. So to me, this was just a failed breakout. Okay, so even though you gapped up in the morning, you had this little tail right here. So this just told me that this stock was topping out. So I see more bearishness for this stock. So do not get ahead of this stock. Do not buy it. You know, if you have to short it, but you know, I usually don't trade stocks like this, at least in the first couple of days. Let the pattern play out, see where it goes, but do not go long. Okay, you don't want to pay up for this chart. Now going back to Nike, Nike looks a little bit better because Nike had actually gained these 11%, and so Nike had a true kind of buying momentum behind it. And you know, you could say, well, you know, Nike looks good, it's consolidating to go higher, and sometimes I look at the 60-minute chart, and the 60-minute chart looks very good. This is a very nice pattern. It might need a little bit more time, but if you look at the daily for Nike, just, you know, understand that if you buy it here now, you would be paying up for it. So me personally, I wouldn't take Nike. What I would do is I would wait a little bit more for Nike to retrace maybe a little bit lower. So if I look at the weekly chart here, okay, I want to show you on the weekly chart, maybe you can take some fib levels. So let me just use my Fibonacci tool, and let me see here what I could do here. Let's see. So just looking at the weekly chart, if I were to draw my Fibonacci tool, okay, I want to show you this here. On the weekly, this week we broke out of this level right here, 53.46. Okay, we had a lot of consolidation here. So if you really want to buy Nike, I wouldn't get ahead of it until it gets to at least 53.46. Okay, so look into it maybe next week or the week after. So hopefully, Nike might reverse down. And then, if you really have to buy it at 53.46. Now, the longer it takes to get down to this level, the better the pattern will look. And so if you buy it next week, okay, at this level, that's just going to tell you that you had this big reversal red bar in order to get to this level, so that won't look too good. And so the longer you wait, if you can wait even more than those 2 weeks for Nike to get to this 53.46, the more solid this bullish pattern will be. But have patience, wait on it, don't buy it now, okay? The next thing I want to look at is the UUP, which is the dollar chart that I use to compare it against the spiders. And let's go back to the 10-minute chart. Okay, the UUP was very weak, and usually there is an inverse relationship between the dollar and the markets, and today was just a great example of that. The UUP gapped down, put in a very strong red candles, and then basically consolidated for the rest of the day. And so when I look at this, this is really the reason why I'm saying that we might have a little bit of upside in the markets into early next week, because this pattern still hasn't played out. And so if it breaks down, if this dollar chart breaks down into Monday or Tuesday, naturally the markets should go back up. And so that is my speculation. Of course, things could change. We might get those news. You never know. I also want to show you the 60-minute chart of the UUP, which has an even nicer pattern. So again, we gap down. We've been putting in a consolidation bearish pattern. And so ultimately what I'm looking at for a target is probably this area right here around 22.30, 335, depending on where the 200 MA is. And so ultimately, if the market should go higher, and you want to look at a level where the market should top in the near term, definitely look at the UUP and pay attention to the 200 MA on the 60-minute chart. Let's see on the daily. I haven't looked at the daily. Well, the daily kind of had a rounded top too. You could argue that there was a little bit of pause, a little bit of bullish pausing here, but today it broke down, and as a matter of fact, the dollar chart closed below the 20 MA. It hasn't been below the 20 MA since February 5th, so this is pretty powerful. Even another factor, one more factor telling me that the UUP might go lower and the markets could go higher. Okay. Now, in the last video, I was mentioning Apple, and I was talking about how, despite Oracle having really bad earnings and gapping down, and IBM following suit, and all these techs being weak, Apple held up pretty well. Okay, so if you look at Apple on the 10-minute chart, and you could use your spider chart next to it, you know that the spider chart gapped up this morning, and then it was pretty much in a sideways range. But not Apple. Apple has been steady for the whole day and closed at today's highs at 461.98. So Apple is looking very good, okay, but I would be careful on the long term. So this is telling me that Apple looks good into next week, okay, maybe Monday or Tuesday, but be careful. I've seen way too many reports on Apple today talking about how Apple, for the first time, closed right above the 50 MA on the daily. And so if I kind of go back and I show you where the last time is, well, they're saying, Apple for the first time closed above the 50 MA since October 2012. And it just seems like there are way too many reports, on CNBC and all these other websites talking about Apple, being so bullish. Well, where were they when Apple was here at 525 and I bought it? Okay, so just understand, if you buy it now, you run the risk of chasing the stock. It might have a little bit more upside if I look at it on the daily, because it had a little bit of a bullish pattern, consolidated a little bit. But be very, very wary. You don't, even if you're in it, protect it, cover at least part of it now. sell at least part of it now, and then if you want to ride it out for a little bit, you know, once you get into the $466 area, 467, I think you are entering the danger zone, and someone might take it in the reverse direction. So be very careful with Apple. Maybe a little bit more upside into Monday, Tuesday, maybe even Wednesday of next week, but you just never know. Okay, if I look at the Qs, we're doing pretty well today, and as a matter of fact, the Qs were leading the markets. The Qs were up about 1% when the rest of the market was only about 0.5%. The spider was up 0.8%. Okay, so the Qs were leading the market, just further solidifying my idea that there is no fear in these markets. Okay, so when the Qs lead the rally, that just tells you that people are more willing to put money into these riskier stocks, and so a lot of money obviously went into Apple today, and that's another reason why I'm telling you, be careful with Apple. Okay, don't hold it for too long. Okay, and one more thing I want to talk to you about is the FDX. Okay, I mentioned FDX yesterday being weak. Today it reversed a little bit, but be careful. Okay, if you get a couple more days of the sideways range, ultimately FDX is not only trying to move to the 200 MA, it will probably go even lower. So if you are holding a short on FedEx, I think your realistic target would probably be around this $92 to $91.65 area. Okay, so it might bounce a little bit off the 200, but I think if the market does what I think it will do, and the more days sideways you get here, the more likely you are to actually pierce past the 200. So you know, if FedEx starts to go down, take some of your profits around the 200 MA, but you know, you could also anticipate a little bit around the 92 level area, because in all fairness, this was a big sell-off in the stock. Not only did it gap down, but it really put in 2 more red candles. Okay, so intraday, when I look at FedEx, what I see is that actually FedEx was reversing yesterday. Okay, it put in a very nice little bottom right here. It's been reversing ever since. So FedEx is gaining a little bit more momentum, but don't let that fool you. Ultimately, on a larger scale, FedEx wants to go down. Nothing wrong with protecting your trade. So of course, you know, if you're in it, don't let the trade go against you. You know, if you don't feel comfortable, by all means, close your short. But what I want to show you is the 60-minute chart on FedEx. The 60-minute chart on FedEx has a beautiful bullish consolidation pattern. In the last 2 hours of trading, this chart crossed the 20 MA, and to me, this chart actually looks very nice into Monday. Okay, so maybe we might get a little bit more upside into Monday, but ultimately on a larger scale. Okay, what I see is that FedEx wants to go lower. So what I'm saying is, don't get shaken out. If you see a little bit more upside in FedEx, you know, stick to your stops, but understand that on a larger scale, if you are short, you're not looking that bad. You actually could have a really nice reward around this $93, $92 area. Okay, and I think that's pretty much it. What I wanted to show you, one more thing, is on the spiders, and I'm losing my voice here a little bit, so I'm going to have to cut it short today. But on the spiders, if you look at the 10-minute chart, on my last video, I showed you a very nice trend line, and I actually took this trade. So if I just were to draw the trend line again, I showed you that if you take the 2 pivot points right here from, I believe, from the 14th and the 20th, you're going to see some resistance here. And what happened is that we made it into this resistance. So if you took the short with me, and I know it's a little bit sloppy right here, but the spiders made it into this resistance area. I took the short, took about 25 cents, made about $450 today. And so if you watch my free video, you could have done the same thing if you are a day trader. And one interesting thing about the spider chart is that it had a really nice up candle, like I said at the beginning of the video, on some volume actually, and closed right on this trend line. And so it will be interesting to see on Monday if it gaps above this trend line. So if the chart gaps above, then this trend line would become support. And ultimately also look for the 200 MA. The 200 MA has been holding up pretty well. Let me see if I can give you any more levels here. If the market goes up a little bit higher, you might have a little bit more resistance around the 155.94 area. I would go to the 156 just to be safe if you want a short, because it's actually very close to where we are now. So for a short, I would kind of go higher. This would be a really nice short, this 156.79 if you can get here. On the downside, we can draw a couple of trend lines, maybe this right here. Okay, so look out for this on Monday. If the market should gap down, look for some support there. I really don't like this chart too much. It's just too close from where we were trading in the charts today. This is a good area right here, 154.32, and then ultimately 154.10. I would wait for the 154 to be safe. So I really like the 154 area the most, and I like for a short, I like the 156.80 area if we should get there, if we should have enough power to get there on the charts. So again, thank you for watching my videos, and join us at TradeTheseStocks.com.